GM, and welcome to the next episode, guys, where I will be giving you some very important advice for your time as a trader. Concept which you should understand is risk reward ratio. As you can see on the screen, is a measure of the prospective reward an investor can earn for every dollar they risk on an investment. In different words, in trading, every decision is a wager. Risk is the pain you accept if the trade fails. Reward is the treasure you can claim if the fates smile your way. So the risk reward ratio should be applied in almost any financial decision you make. And it's actually a lot broader than just looking at simple trades on a chart. So the ratio tells us how much are we willing to lose and how much potentially can we gain. And based on this, you should approach the future of trading. Even if it's degens, if it's leverage trading, if it's spot positions, or if it's any investment at all. So here we have a prime example on the chart of Solana, on the daily chart, of a risk reward ratio. So on your futures, you always want to set up a stop loss and a target price. So when you're entering the trade, you actually know what you're playing for and where you will be marking your targets. So when the trade is successful and when the trade is unsuccessful, for you not to lose more capital than assumed in advance. So taking a look here, this is a risk reward ratio 1-to-1, which means that, well, if you win, you get the reward, but then if you lose, you're basically on zero. This isn't a good risk reward ratio, although I know a couple of traders who are using this. They are profitable basically because they are more often right than wrong. Although it's tricky, because if you are on a streak, on a loss streak, and this can happen, then you are in drawdown of capital, meaning that you will be in minus constantly, which can affect your psyche. It can affect your mentality and your approach. Let's make a picture. Imagine two warriors, okay? The first warrior risks $100 to gain 100, and the second one risks 100 to gain 300, okay? So the risk reward ratio would be 3-to-1. So the first one, breaking even, is in his destiny. Let's say he wins, he loses, he wins, he places 100 trades, 50 are in loss, 50 are in win, and he's still on zero, break even. If he wins 51, then he's in slight profit, right? On the other hand, you have this guy who is placing 1-to-3. This is risk reward ratio actually is 2-to-1. So here we will be 3-to-1. As you can see on TradingView, once you mark it, will be showing you perfectly the risk reward ratio. So then you can assume and you can see if this trade even works for you on your risk reward basis. So this guy needs to win one trade in every 3 trades and he's break even. If he wins more than 1 in 3, then he's profitable and much more profitable. So that's the case, right? But not always you can make 1-to-100 risk reward ratio, because these trades won't hit. Okay, let's get an example. The chart is not important here, but let's take Bitcoin and let's place, this is the feature which I use. Okay, here for example, you're a trader that risks 1-to-1. You're risking $10 to win $10, right? Boom. Here's the other guy. He risks $10 to win $20. So this guy would need to win, is it 20? Yeah. This guy on the right hand side would need to win 1 trade and he could take 2 losses and he would still be break even. So it's up to you to decide, and it's up to you on every trade to assume and to analyze where you can place your stop loss and what would be your potential target. The goal of a successful trader is to take the positions where the risk you can make the lowest, lose the least, when potentially the chart will reverse. Okay, so once again, your goal as a trader and investor is to take the trades which have the best risk reward ratio. So you have a support level, you're waiting patiently, and you know when it will be broken down. You will set your stop loss, but the upside is a lot bigger for you to win. Common mistakes of traders regarding RR, in short, risk reward ratio. Number one, moving the stop loss to avoid pain. Okay, so what people do, they have a stop loss set, they have their own trade going, and they're in, and then they move the stop loss because they want to avoid accepting the loss. And this is a big problem because mentally we are not prepared, and we want to avoid this pain of making a mistake and losing money. But that can lead us quickly to bankruptcy. Because you see, friends, the crucial thing in trading is to have self-discipline. Even when everyone is shouting, no, this will fail, this will drop, this asset will go down, your friends are telling you, you have to have your own plan and you have to stick to it. Because all of this is noise. And with your self-discipline and with your plan, with your stop loss, with your target, if you over time manage to hit these trades, depending on your risk reward, you will be profitable and you will make a business out of this. So this is crucial. Don't forget, number two, don't forget fees and slippage. So every exchange has some fees for a maker. So if you open market position, you'll have to pay a little bit. And slippage, if you're trading on low liquidity pairs, it can also affect your entry. So you will be buying with the market for 1,000 units, and there's a potential that the entry will be a little bit higher. If you're on a limit order, you're waiting for the orders to fill, then most likely you will not experience this slippage because the orders will be there for the market. So guys, when you trade altcoins, when you trade Bitcoin, when you trade futures, remember, this is not a single battle. It's not for you to make the one big trade on big leverage and win. It's a war. You're there constantly with the market and you're fighting. Today you lost 2 battles, but tomorrow there will be a chance that you will win. And if consistently you're winning more than you're losing based on your risk reward or based on your strategy, you will be profitable. If you have, let's say, a regular 1 to 10 risk reward, there can be many days where you're just in loss because your stop loss is hit. Maybe the stop loss is very tight, you're looking for a perfect sniper entry and you're getting stopped out. This happens, and that's totally fine because your risk reward ratio is so big, 1 to 10, that you hit 1 trade in 10 and you're break even. If you hit 2, you're in good profits. So now you guys, you understand how the risk reward ratio should work. You should apply this in either even your degen trading, because when we're trading on degens, there's a risk that our coin can get rug pulled or it can quickly go to zero. So if you're investing, practice money management. Don't jump all into one coin and take the risk that it can potentially go to zero, which means you should take your initials when given at 2x profit. This way you're securing yourself and you can ride moonbags. So risk reward ratio should be applied as well onto on-chain trading. That's it for today, guys. Thank you for joining, and I'll see you soon in the next episode.